Hey traders, welcome back to the channel. I'm going to try something new from this week. I'm going to do a weekly analysis to look at the bigger picture with a multi-time frame top-down analysis. As usual, I will focus on EU, but I'll be happy to take requests and review other pairs in the future. At least for the weekend analysis, the session analysis, I probably won't have time to review and get to it. But normally on the weekends, I should have a little more time if you have any particular pairs you want me to review in the future. So without further ado, let's get to it. So starting with the news, we have some interesting things that are coming up as we speak. So we have the G7 meetings that started today. They'll last for 3 days. This could potentially have some major impacts on the currencies when the market opens. So there's a chance that as soon as the market opens, we have some major movements in the markets, mainly due to these G7 meetings. So we've seen in the past where we've had huge movements or gaps over the weekend when the G7 meeting started, and I wouldn't be surprised if we saw the same thing on Monday. So continuing on, so we have the second day of G7 on Monday, the third day of G7 on Tuesday. We also have consumer confidence for USD on Tuesday. And note, these are in JST, so Japan time. So that's roughly 2 hours after New York opens. And then on Wednesday, Wednesday is going to be quite interesting as well because 10:30 is an hour and a half after New York opens. We have Lagarde speaking, and we also have Powell speaking at the exact same time. On Thursday, we have core price index for the USD 30 minutes after New York open. And we also have unemployment claims at the same time. And then Friday, we have manufacturing PMI for EUR. And this will be an hour after London open. And later on, we have manufacturing PMI an hour and 45 minutes after New York opens, and ISM manufacturing PMI 2 hours after New York open. So what we can see early in the week, we have the G7 that can potentially cause a lot of volatility in the market. In the middle of the week, it's a little quieter. And then towards the end of the week, we have PMI that could cause movement and volatility in the markets. Next, going to Dixie. So as I said, I always put focus on Dixie because obviously Dixie has a huge impact on all the majors. So I want to do the top down on Dixie just to get a higher time frame bias on what to expect. So if we look at the monthly, you can clearly see that it's very bullish. Even when we come back way back here from 2008, we had a huge consolidation, which triggered the reversal, pushing the markets up bullish. And then ever since then, we've had some significant pullbacks, ultimately pushing further to the upside. So again, this dates back all the way to 2008. And if we look a little closer on what we've seen this year, so not even this year, since last year, we had a consolidation um, triggering this bullish monthly leg. That's more or less been mostly bullish candles up until April, where we had a huge push up. So this is around the time that the interest rates were increased for the US. And we've had some pullbacks since then. So last month was a pullback month, and this month we started to push up again. So that's a monthly view. You can see it's clearly bullish. On the weekly view, so you can still see it's very bullish, but in between you can see that there's been some notable pullbacks before every drive up, and we currently just did that. So we had a pullback, a next drive up, and then you can see on the weekly we started to come down. So what can we expect next? Well, potentially this could be a pullback for the next drive up. If we go on the daily, so what you can see on the daily is again significant pullback, and then the next drive up, and then we had another pullback that came back down. Actually, if you look at the weekly candles, you can see that we had that drive up, and then that push down on the last weekly candle. But if we go on a daily, you can see it's been a lot of consolidation. So how do I look at this market on the daily? We've had a 50% pullback of the last leg up. And usually when we have these aggressive pushes up, we usually have at least a 50% pullback, and then the continuation for the next leg up. So we've already had that 50% pullback. We've done some consolidation since then. So my expectation is we're more likely to push up than to reverse and come back down. If we go on the 4-hour, so you can see on the 4-hour, it's actually been coming down a lot the last couple of days. But at the same time, it is in this internal range playing around. We've already come down and look here, tap demand, reacted off of it. So potentially we had that distribution triggering this push down, created a low, came back up, tested supply, broke the low. This low could be potential inducement for the next push up. But what had happened since then is it came back up, tested supply, came back down again, and tested demand again. So I mean, right now it's somewhat bearish, but as you can see on the higher time frame, it's clearly bullish. So my expectation is a push up, either from here, because we've already tested demand. It could just start pushing up from next week. Like I said, we have the G7 meeting currently in progress. It could potentially create a gap, triggering a huge push up. Which could be the start of the next leg that either comes up, tests supply and reverses, or continues and breaks the top. And there's some reason for that, why I say it could just reverse, and I'll get to that a little later when we talk about EU. And potentially it could once again come down, use this low as inducement, Good. Sorry about that. Could use this low as inducement, come deeper into the demand, and thereafter aggressively push up to trigger the next wave to the upside. So as of right now, there's a lot of uncertainty with the G7 meetings. But if we focus purely on structure, my expectation is we come down, test deeper into the demand, and start pushing up, or we've already done the job, tested demand, and essentially start pushing up from here. Okay, so that's it for DXY. Now let's have a look at EU. So if we start with the monthly, you can see that it's heavily bearish. Again, going back from 2008, on this time frame, you can see it's just been creating lower and lower lows with some significant pullbacks. There's really no zones to monitor on this time frame, just because the supply is just way too high up here, and I don't expect that to get tapped anytime soon. It's more likely, at least for me, to come down before it goes up and tests that supply. If we go on the weekly, so again on the weekly, you can clearly see ever since the beginning of last year, it's just been bearish. So it's just been creating lower lows and lower highs up until now. We haven't even tested the weekly supply of the demand, and as of right now, I don't expect that to happen, because you can see we've come down, created a new low on, I believe, a weekly demand, came back up, pushed down a little, retested supply, and then aggressively pushed down. And then after that, we started to push away. But this weekly candle right here is a little deceiving, and I'll show you why when we get to the daily. So now on the daily. So a reason why I say it's quite deceiving, that weekly candle, is because the price has been consolidating quite a bit in this area. It is slowly pushing up. But my expectation is, if you look on the daily, what you can see, we haven't broken any lows on this leg, but what we can see is this leg, it's already come back to the 50%, so it's already done a 50% pullback. So from my point of view, I mean, potentially, if it's going to go down, it could do that anytime from now. Originally, I wanted to see upper supply hit, so either this daily zone or the 4-hour zone that is right here. And you'll see that on my 4-hour chart in a second. But potentially, as we saw in DXY, we've already broken highs. This could be the inducement that triggered the move down. Now it could potentially just be doing a retest of supply before it pushes down. So we'll see that a little clearer when we go to the 4-hour. So here's a high that was broken. So again, we broke that high. Potentially use that as a trigger for the inducement to start the next push down. So you can see we had a really aggressive push down here. And if you saw my videos on Friday, A lot of the analysis that I did was based on the fact that this was such an aggressive push down that I was thinking that there are probably institutions that have orders here that they want to keep before they start to drive the price down further. And as of right now, it's tested the supply, hasn't broken it, so those orders from the institutions are still intact. And potentially, there is a possibility that we could just see the price start to push down from here. Again, we have those G7 meetings, so there's going to be a lot of uncertainty and probably a lot of movement the moment the market opens. So potentially this could go either way. So this is one scenario that I'm saying where the sellers have already done their job. They've already used the high here as a fuel that's needed to start to push the price down. And you can see we had that aggressive move down. We're starting to gradually come back up, test the supply. We reacted from it, starting to retest it again, and potentially could come down from here. And then another scenario that I could potentially see is the price doesn't come down from here. It uses this high as inducement, comes into this 4-hour supply, has a reaction off of it. Let me just do this. So pushes up, uses this high as inducement, so takes out those orders, comes into supply. After that, we start to trigger the reversal in this way. So that's the second scenario I'm seeing, and obviously the third scenario is, price could just continue up from here. For me, that's kind of not out of the question, but it's the least likely scenario that I'm seeing right now. And to give a little more background on why I'm bearish on EU right now, it's mainly because we just had an interest rate hike on the dollar, so 75 points, and that's like the highest rate hike in over 20 years. So my expectation, at least short term, is for Dixie to start to push up and EU to start to push down. And potentially this could only be temporary because there's one more thing that I have in the back of my mind that could trigger a reversal in the very near future. And I'll get to that in a second. So just to sum up, so fundamentally and technically, it makes sense for the dollar to push higher and EU to start to push lower. But again, like I said, this could be short term. Originally, I kept in mind the higher time frame structure, and obviously expecting this low to go. So looking at higher time frame intention, it makes a lot of sense that this low goes. But at the same time, what I have in mind is it's the end of June right now. So next week we'll continue until Thursday, ending June, and then Friday will be the first day of July. And for those of you that are aware, on the EUR side, so ECB has a plan to increase their interest rates by 25 points in July. So as of right now, the interest rates are zero and have been zero for some time. So this is going to be the first interest rate hike that we've seen in a while. And the expectation then is for EU to start to shoot up. We already had some signs of that. I can't remember when exactly we first started to hear about it, but we did have the price start to push up. I can't remember if it was in this wave or somewhere in this wave, where they started to talk about raising interest rates, and that triggered EU to start to push up. So as of next week, my expectation, whether it's from here to start to push down and come down at least to this untapped demand, you can see, maybe you can see, this demand has not been tapped. So there's a small gap between these two demand zones. So that's why I'm looking at least for a first target for next week, this demand to be targeted. And obviously continuations to break the low. Second scenario is price to come up higher, break this high, use it as inducement to fuel the next move down. And then again, the third scenario, as I said, is price could always just push up from here. Although for me, this is the more unlikely scenario. So this is for my expectation for next week. But ultimately, like I said, I'm not sure how low the price is going to go, whether it just reacts off this demand or comes and breaks a low. Because next week, from next week on, continuing through July, my expectation, at least fundamentally, is for price to start to shoot up. This could be a temporary pullback that could start at least a move to test some of the higher supply zones. At the same time, it could be the start of a potential reversal. If we think about fundamentally what's going on, I mean, the world's a complete mess right now. I mean, a lot of the reason why EU has been just driving down so hard the last few months is essentially because of the war in Ukraine. But now that we're starting to talk about interest rates rising in EU, that'll give a little more fuel to start to push the price up. But at the same time, there's a lot of talk about in the US about a recession starting. And if a recession starts, it could have a huge impact on all the markets related to the US, which could cause a weaker dollar. The stock markets will also be affected, but it could give EU a little more strength to start to push up for a potential larger pullback or reversal. Okay, so anyways, that sums up what I'm seeing on the higher time frames. I won't go below the 4-hour time frame because we'll talk about more intraday type moves or expectations when I do my session analysis before London and New York next week. But at least for the weekend, I want to stick to the higher time frames, just to give some ideas of what we can expect for the coming week, and targets to look for, and where the price could potentially go in the coming week. So that's it for me. I hope you found this useful. If you did, please like and comment, give any feedback that you have. If there are other charts that you want me to look at, at least for the weekend analysis, like I said, I may have time to have a look at those, and share some analysis on those as well for the coming weekend analysis. But that's essentially it for me. Hope you guys get some rest tonight before we start trading again from tomorrow. And I hope you guys have a really good trading week, because I think there's going to be a lot of opportunities next week. Okay, thanks again for coming back and watching my my videos. And I'll speak to you again when for London Open. Have a good rest of the weekend, and speak to you then. Cheers.